afternoon traders, and welcome to today's daily market review. It is Thursday the 6th of August, and today we're going to be taking a look at the UK stock Astrazeneca. Now, since May of last year, the market has typically been trading sideways. So we've had this sideways movement which began around May 2014, and this lasted up until April 2015. Now, since April, we've seen around about a 10-week decline of around 912 points, and this ended in July. We're starting to see a slight rally. The market has retraced in and around 48% of the decline. We've seen a thing of 413 points, and if we look at the correction, it's taken the form of an AB equals CD pattern. So again, for most of you that watch our reviews, you'll be very familiar that we trade these patterns regularly, and that they are high probability patterns when it comes to looking for a reversal and the continuation of a trend. So since the weekend in 3rd of July up until the current time, the market's currently trading in and around 44.20, and what we want to do is we want to dial down to our daily time frame, and we want to look for high probability areas for the termination point of the AB equals CD pattern, and then we're going to identify Fibonacci zones that we'll be looking to take a sell or a short position and ride the trend to the downside. So if we dial down to the daily time frame, here we can see the AB equals CD pattern more clearly. We've identified 3 Fibonacci reversal zones that may have the termination point for the pattern, and our first zone is 44.0609 to 44.15. Our second zone is 44.57.7 to 44.75.4, and our third zone is 45.20 at 45.39.6. Now the market has already entered into our first zone at 44.0609 to 44.15. This isn't our preferred zone. Our highest probability zone is the second zone, which is marked by the square, and this is for several reasons that I'm not going to go into, but they include components from the pattern and also our Elliott wave count. So market's currently trading 44.24.5. High probability target zone is 44.57.7 to 44.75.4. So once the market reaches our second zone, we'll be looking towards our 60-minute time frame, or one of our lower time frames, and we'll be looking for one of our entry criterias to qualify. Okay, so even though the market has entered into our first zone, this is our highest probability zone for the reversal. So we'll be looking for our second zone to be entered, and then we'll be dialing down to our lower time frame and looking for an entry trigger. So if the market was to give us an entry trigger from this point, we'll be looking for our first target at 41.35.5, and our second in and around 40.19. Now in terms of momentum, we have a overbought indication on our oscillator, so the market should be expected to move sideways to down over the next few days, and the same is true on our weekly time frame. We also have the market in the overbought zone. So in the coming weeks, we will be expecting the market or the price action to be sideways to down. In terms of our time windows, we have a time window which is from the 11th of August to the 13th of August. So in terms of our price, we'll be looking at 44.57.7 to 44.75.4 for reversal. We have bearish momentum on our indicators, with both indicators being in the overbought zone. In terms of our time window, we're looking from the 11th to the 13th of August. So slightly more upside we're expecting for Astrazeneca, and then we'll be expecting a move to the downside with a minimum target zone of 41.35.5, and then our next target is 40.19.